Hey guys, welcome to another weekly focus. So I'm just going to show you guys a quick trade recap. So let's look at the trades I had this week and the trades I've been holding. So let's start with gold. I had this buy position in gold and I showed you guys already, and I've been holding this position for a couple of weeks now. So I went in on the buys here and I was expecting prices to move to the upside and probably test 3,000, but the target for me is like the daily highs. So we'll take out this area and we'll take out the daily highs, and that's the target thing for me on gold. So I'll just show you the progress on this one currently. So you're looking at this. So we had an entry around here, so price took off, pulled back to this entry point. It was right around break even at this point, and price took off again to the upside. There's a pullback thing and price is moving again to the upside. So I'm looking at this position right now. So I have my buys in already. I'm still holding this, and the movement to the upside is not as impulsive as I wanted it to be. So normally I would expect this price to move like this, giving you minor pullbacks, an impulsive move with minor pullbacks and something like this. So this is what I was expecting normally, but if you look at this, it's quite different. So you had a move, you had a consolidation, pop out, move, deeper pullback, and now you're seeing price moving to the upside, but it's taking longer than expected. So when I see price action like this, I might manage the trade a little bit different compared to one that moves impulsively, because this might just be like early signs telling you the buyers are really struggling to take prices to the upside. So I'm looking at this area right here. I have my eyes set at this point. I'm looking at this and I'm asking myself, how is price going to react and take out this area? So if we take out this area impulsively, which is this high, and you can see this on the hourly time frame, I'll show you guys this. If we take out these highs impulsively, then we might see the move again to the upside picking up. So, and another thing, we're just starting the year, so you know, after the new year and everything, after the festive period, we're just starting the new year. So there should be more volume coming into the market. So what you're seeing right here, this choppy moves, slow moves and stuff like this might be as a result of price just taking its time for more traders to come in, so we can have more liquidity and more volume in the market. So that's the position I had for gold. So I'm still holding this gold position. I'm going to show you guys the ones I've been struggling with right now. So let's start with US30. I had the buys on US30 right here, had my stop loss here. So after the NFP release today and stuff like that, so I was sat in this consolidation. And after the NFP release, I got stopped out on this one. So I was normally expecting prices to take off after this consolidation for a move to the upside. We'll analyze this pair again. So I got stopped out on US30, that's a -1. You look at NAS100, same thing. I had my buys here. This took off initially, so we had the buys playing a little bit. We had prices dropping back, consolidation, NFP release again. I got stopped out on this. So on NAS100, that's -1 on NAS100. I will look at the S&P500 real quick. Same thing on the S&P500. Had the buy set in here and I got stopped out on this as well after the news release thing. So I had my buys in here and I got stopped out. So that's a -1 on the NFP on the S&P 500. So -1 S&P 500, -1 NAS, -1 on US30, and I'm trading these pairs on different accounts. So every account takes just one pair. So I'm not down a lot on these pairs, and I'm still holding the gold position on its separate account as well. So that's one benefit of you using multiple accounts. But let's look at what we have for this week. So let's see. And the first thing we'll look at is the DXY. And I'm just going to show you guys this. So we're looking at the DXY on the daily time frame. Now this is a structure I've been looking at, and if you look at my levels, I've modified these levels a little bit just because there's more price action I'm working with, and I'm going to be taking less trades or less positions this year. So the intention for me is just to look at bigger moves, capitalize on these bigger moves and get maybe 1 or 2 entries, and just sit and hold these positions and do very little when it comes to analyzing and managing the positions. So if you look at my levels, it's a little bit modified, and I'll probably take about a week or 2 to test these levels and really see, or not really testing the levels, just to see if I'm comfortable holding positions within these levels, and if I'm confident, then during the year those are the levels I'll be looking at. All right guys, so let's look at this. So this is the move thing I've been telling you guys. You had this move to the upside, you had a pullback, pivot point, you had a move to the upside, you have a consolidation. So normally you're looking at the DXY and you're expecting prices again to move to the upside. Now the question is, if price has to move to the upside, where is price most likely going to gravitate to, and is there any trend line we can use just to anticipate or to see how these guys are taking prices to the upside? So if I clean this, the first question is there a psychological level we're playing off of? So there's a psychological level of 110 and there's a psychological level of 100. So we had sellers coming down, a rejection from the buyers, sellers coming down, rejection from the buyers, and the buyers took prices all the way to 110. So price is currently sat at the psychological level of 110. We haven't really broken above 110. So if a rejection occurs at 110, then price is going to most likely gravitate back to 100. So that's how I'm looking at it when it comes to psychological levels. And you can put, let's say, trend lines to see if there's going to be any roadblocks if price has to come to the downside. So there's two things you can look at when it comes to the psychological levels. So the first thing is, if you get a rejection at 110, you should expect prices to move all the way to 100. If you get prices moving above 110, you should look at this highs right here. So this highs right here could be a problem, and the reason I'm saying so is once buyers took prices to the upside, you had sellers stepping in here and they had this impact on price. So you see they took prices to the downside, keeping prices below 110 and trading all the way to 100. So if we get prices above 110 again, I'll pay attention to this high, because sellers might step in again and you see prices just trading again below 110 and you see a further move to the downside. So that's something I'm paying attention to. So going off of psychological levels, I'm going to expand this. So we'll look at this on the daily time frame. Going off of psychological levels is quite easy. So you're looking at price currently. Price moved from 100 all the way to 110. An inability for prices to go through 110, you should expect prices to drop to 100. And if prices go above 110, pay attention to the highs here, because sellers might step in again and bring prices below 110. So what I'm looking at currently, I'm going to expand this again. So this is what I'm looking at currently. So I'm paying attention to this piece of price action right here, and it's quite difficult for you to see this on the daily time frame. So if I shrink this again on the daily time frame, let's say you zoom out on the daily time frame, what you see on the daily time frame is an impulsive move to the upside. You get a correction, pivot, an impulsive move to the upside. You're expecting prices to pull back to the daily trend line so you can take buys again to the upside. So while you're waiting for this to happen, step down to the 8-hour time frame real quick. So in the 8-hour time frame, you have a similar move. You have your impulse consolidation thing, pivot point. So you're normally expecting prices to take out these highs and, let's say, continuing its move all the way to 120. That's the next psychological level above these highs. So you're looking at this on the 8-hour time frame, and as price is moving to the upside, I'm paying attention to the trend that the price action is giving me. So if you look at this piece of price action here, and you see this clearly on the 4-hour time frame. So look at this piece of price action right here. You have price moving all the way from 100, and you have buyers stepping in, taking prices all the way to 110. So it gives you an impulse, it gives you a correction, an impulse, there's a correction, there's an impulse, correction, impulse. So normally you're waiting for a correction to come in and for buyers to reattempt the buys again. An inability for prices to go through 110, you should expect a crash to come in and a break or a violation of this trend line. So if I take out this, do this one more time, you get a move from 100 to 110. So every time price takes out this high, so you see a move to the upside, you get a pullback. When price takes out this highs, there's a move to the upside, you get a pullback or this consolidation thing. Now price is taking out these highs, there's a move to the upside, you should expect prices to pull back to this trend line on the 8-hour time frame, wait for an attempt again from the buyers, and an inability of buyers to take out these highs, you should expect sales to come in. Now if the buyers come in impulsively, you should see prices taking out these highs and going above this psychological level of 110. You might get a further test of 110 and you see prices moving again to the upside. So that's a game plan thing for me. So I'm looking at possibilities for prices to go above 110, but an inability for prices to go through 110. I'm expecting pullbacks to come in. And I think this is very simple, this is very easy. So you're looking at this structure, I think you can see this on the 4-hour time frame perfectly. Alright, so this is a 4-hour time frame. You get your impulse thing, you get a correction, you get an impulse, you get a correction, you get an impulse, you get a correction, you get an impulse pullback, and prices moving again to the upside. So you're expecting prices to pull back to an area like this, and for buyers to reattempt the buys to the upside. So that's the primary buyers thing for me. I know there's a possibility for this to keep buying, or you see prices moving to the upside. That's a possibility, but I'm going off of the psychological levels and I'm going off of the trend line. So if you're looking at the psychological levels, here there's 110, and at the bottom part right here you have 100. So impulse correction, impulse correction. I'm going over what price is doing with this trend line right here. I'm expecting prices to pull back to this trend line, so I'm expecting a move like this, and for another attempt from the buyers to take prices to the upside. So that's it for me on the DXY. It's nothing really complex. I think it's just an easy move, and this is something we've been looking at. So the NFP got released today, and we saw some volume coming into the market, and as I said before, I'm expecting more volume to come in, right? Because it's just the new year thing. Most traders are coming back to their decks, so you should expect most institutions, banks and stuff like that to start moving prices again impulsively. So that's what I'm looking on the DXY. So all I'm waiting for is, let's say, pull back to an area like this and an attempt again from the buyers. So once I see these pullbacks coming in, I'll wait for this attempt from the buyers to see what the buyers are going to do, because I'm paying attention to this area right here, which is a psychological level of 110. An inability for prices to go through 110, you might see a consolidation thing, but then you should expect a drop to the downside. So that's the buyers thing for me on the DXY. So if you ask me, like, what's the DXY doing currently? The DXY, looking at it from the 4-hour time frame, is still in an uptrend. There's a move to the upside, there's a pullback, there's a move to the upside, there's a pullback, there's a move to the upside, and you should expect a pullback. So the DXY is still very bullish, but I'm trying to capitalize on these pullbacks. So you look at pullbacks like this. So if you have buy positions on other pairs, you can hold those positions and capitalize on these pullbacks on the DXY. And that's why I still have the positions on gold. So if this takes off impulsively, then it's going to be a problem for me. So in as much as the DXY is still bullish, as the DXY is moving to the upside and giving you these pullbacks, which is like a bearish structure thing, this is all you need to hold the other positions, or this is all you need to hold the buy positions on other pairs. So I'm going to clean this and you can look at this. So that's a very simple move on the DXY. So pay attention to what's happening on higher time frames. And as I said before, this year I'll take less trades, and I'll just hold them for a little bit longer compared to the previous year. So that's it for me on the DXY. And look at this on higher time frames. Look at this on the daily time frame, just so you can understand what price is doing. So you look at an impulse thing, consolidation, pivot, impulse, consolidation. You're waiting for prices to pull back to this daily trend or the daily trend line, so you can take buys again to the upside. So while waiting for this, step down to lower time frames, look at the psychological levels, look at the trend line that might hinder prices to move to the downside. But if you get a violation of that, it's a clear move now to the downside, so prices can then deliver to the daily trend line. So that's what I'm looking on the DXY, and I'm going to stick to this analysis. So if I had to pay attention to the time frame on the DXY, I'll pay attention to the 4-hour time frame, because there's this trend line thing I'm looking at right here, and I just want to see how price keeps playing around this trend line. So once we get a violation of this trend line, it becomes easy. So you're looking at this impulse, impulse, impulse right here, an inability for prices to go through this area. You should expect a break to the downside. So we'll keep paying attention to this, pay attention to the pullbacks, pay attention to the buy or the attempt again from the buyers, and an inability. I'm looking for this crash to the downside. So this is very beautiful because you have this psychological level here of 110 and you have the trend line thing. So once you combine these two together, it makes it very easy for you to anticipate price movements. So that's my analysis on the DXY, and we can look at the first pair. So the first one is some US30. So here's US30 on the daily time frame. Also, I have my levels modified a little bit. I think I mentioned this last week on US30. So now I have 35,000, 40,000 and 45,000. So we're looking at this on the daily time frame. I'll zoom out a little bit just so you can see the structure thing we're playing with. So you look at this, there's an impulse thing, there's a pullback consolidation pivot point, and there's another impulsive move right now. So looking at this impulsive move on US30 and on the daily time frame, normally you should be expecting this price to pull back to an area like this just so you can reattempt the buy. So you're looking at this area right here, you're looking at these areas right here, and at the back of your mind thing, you're like, if price can pull back to an area like this on the daily time frame, to this trend line on the daily time frame, then it's going to be very easy for you to reattempt the buys again to the upside. So while waiting for prices to pull back, you can step down to lower time frames. So here's the 8-hour time frame. You look for a trend you can work with, and you look for the psychological levels you can play with. So the first thing is, where is price currently at, and where is price most likely going to gravitate to? So we're going to zoom in on this. So you're looking at a move like this. There's a psychological level here of 45,000. There's a psychological level below it, which is 40,000. You had buyers coming up all the way to 45,000. There was an inability for prices to go through 45,000. So that psychological level, there was this inability, sellers stepped in. Now, going off of the principles of psychological levels, once you have an inability for prices to go through one psychological level, you're expecting prices to then sell to the next psychological level, which is 40,000. Now, when you bring in now the concept of trend lines, so there's a trend line right here, you can tell this trend line is causing problems. It's like a roadblock. So it's preventing these prices from dropping all the way to 40,000. So I'm paying attention to this. So I'm looking at the psychological levels, I'm looking at the trend line. So the question now is, has price taken off this trend line completely? So has price broken out of this trend line completely? And that's a that's a question I'm yet to answer, because when you look at the price action thing, this minor break like right here, so price just breaking out of this area, it's not enough for me to say there's a violation of this entire trend line. So I might need more price action, because you might, let's say on Monday or Tuesday, you might see prices just moving back like this, and you see a continuation move again to the upside. So I've seen this happen many times, and that's why it's very difficult for me to rush into conclusions. So if I was to look at this, so looking at this right now, if I had to, let's say, anticipate the next move on this pair, I'll look at this again on the daily time frame. So clean this, step back on the daily time frame. So the first thing is just understanding what price is doing from this higher time frame. So price is playing between 45,000 and 40,000. An inability for prices to go through 45,000. We're expecting prices to drop to 40,000. Now, why are you expecting prices to drop to 40,000? You're looking at this trend line, which is you're looking at this trend line, or you're looking at this build up on the daily time frame, which is simply a trend line on the 8-hour time frame. So once you step back to the 8-hour time frame, you have your trend thing on the 8-hour time frame. So you're looking at this impulse, massive consolidation, price takeoff, giving you this impulse, and price is pulling back to an area like this. So looking at this US30 from the 8-hour time frame, we're still having this bullish structure on US30. So it's very early for us to say price is selling or price is reversing its move. So it's still very early, so we need more price action. But just looking at this, there's still a possibility, and looking at what's happening on the DXY as well. So if I'm expecting this push to the downside on the DXY, and then I'll still be expecting the buys again on US30, but there's just more price action I need to see. So let's say price pulls back to an area like this. So if price comes back and starts trading within this trend line thing, I might look for a pullback to an area like this and then take buys again to 45,000. So it just depends on what's happening, and you need to, I'll personally look at the DXY, look at US30, and look at other time frames just to make sense of what's happening. So if price stays below this trend line, so this is the trend line thing I'm talking about. If price starts trading and price starts going lower, giving you a structure like this, then it's easy for me to then look for selling opportunities, knowing that the next target has to be 40,000, and paying attention as well to what's happening on the daily time frame. So if price stays below this trend line on the 8-hour time frame, this is what I'm talking about right here. If price starts trading below this point, so I'll look for structure moves like this to take prices to the downside, because at this point there's a clear path to like 40,000, and there's a clear path as well to this trend line on the daily time frame. So but currently I'll still pay attention to this on the 8-hour time frame. A pull back to an area like this, a test, and I'm still looking for prices to move to the upside so we can test 45,000. So once I have a situation like this, where I'm a little bit confused, or let's say I'm not very sure of the move, I'm not very sure of the next anticipated move, I'll just sit on my hands and let price give me more price action so I can decide or make better decisions. So looking at this right now, I'm just gonna sit on my hands and wait to see if prices can pull back to an area like this, look for a test, take prices to the upside. If prices stay below this area, so you see prices tanking, giving you these pullbacks, then you can look for a sell to the 40,000 level. So there's nothing I can do right now on US30. I tried the buys already from an area like this, so I was expecting prices to take off from an area like this, which is normally supposed to be the pivot point thing, and it failed. So you see price came to an area like this. That was the first attempt from the buyers. Prices came back, another attempt from the buyers. Prices came, another attempt from the buyers. So all these were just clear indications that buyers are finding it difficult to take prices above this area or from this point. So you're looking at this right here: sellers, buy attempt, sellers, buy attempt, sellers, buyers, sellers, buyers. And so the buyers just find it difficult to launch from an area like this. So at this point, I'm just going to sit on my hands unless prices can pull back to an area like this, giving me this test, and then move to the upside. So that's it for me on US30. There's nothing I can do at this point, so I'm just going to sit on my hands, as I said already. Alright, let's look at the NAS100. So here's an interesting one. I've modified my levels as well. So I'm looking at 15,000, 20,000, and 25,000. So looking at this on the daily time frame, so let's just go off of the structure moves first. You have this impulsive move, you have a consolidation thing, and you have another impulsive move. So you're normally expecting prices to pull back to an area like this on the daily time frame, so we can take prices to 25,000. Now this is very interesting. This is really good, because when you look at this on the daily time frame, you can tell already where price is headed to, and it's gonna take time. So look at this structure right here. Let's see if I put something like this. So it took prices 230 days to move from an area like this to this area, and we had a pullback or sat through a consolidation for almost 100 days. So I'm looking at this move right here, and we've done 45 days already. So we might see, let's say, 141 days. So for 2025, I'm still expecting NAS100 to move to the upside. I'm expecting these prices to move from, let's say, from this 20,000 level, and we started the move already. So hold on, let's do this. So we started the move at 20,000 already. And here's the reason why I'm looking at bigger levels, because it makes it easy So if you're looking at bigger levels, you're looking at bigger zones, it's easy for you to understand the move. It's easy for you to see the move, like the anticipated moves. And all you have to do is now scale down to lower time frames and see if you can get entries. So you're looking at this move right here. Price is currently trading above 20,000. Where is price headed to? Price is headed to 25,000. And where is price currently at? We're almost at this point. So is there a trend line you can work with? There is a trend line on the daily time frame. Has price tested this trend line? Not yet. So there's still a possibility for us to see the sales coming in. So giving you this move to the downside, there's a pullback move to the downside, pullback move to the downside, giving you a move like this, so you can take this buys again to the upside. And that's why I say it's very important for you to look at, let's say, bigger structures, because once you look at bigger structures, it's very easy for you not to fall in these traps or to get wiped out or wigged out and stuff like that. So if you take a loss, then that's just a normal loss thing. So I'm looking at this again on the daily time frame, and the anticipated move on the daily time frame is for us to see prices moving all the way to 25,000. So while looking at this on the daily time frame, normally I'll be expecting prices to have a test of this area and for the buyers to attempt again to take prices to the upside. That's my bias on this, looking at what price is doing currently. So, and I have to respect the trend line thing on the daily time frame, because a trend line on the daily time frame is a lot of data. So if you look at this trend line thing, so this has been a move from, let's see, and that's why it's very powerful. So you're looking at this move right here. So price has been respecting this trend line from the 29th of December 2022. So you had price moving to the upside. So we started this move in December 2022 and we're here currently 2025. So that's massive, and that's why I say when you have a trend line on higher time frames, you need to pay attention to this trend line, because if price pulls back to an area like this, you should expect buyers again to look for entries to take prices to the upside. It's just that simple. So there's a lot of people looking at these areas, there's lots of people looking at these levels, there's lots of people looking at this trend line. So I'm still going to stick to that bias. So let's look at this on the 8-hour time frame. So on the 8-hour time frame, we currently have a breach on the 8-hour time frame, or a violation thing. So you get this impulse thing, correction, impulse, pullback, impulse, pullback, inability of prices to take out these highs, and you see price trading outside this trend line on the 8-hour time frame. And this is the important thing. Once you have price doing something like this, step back to the higher time frame, step back to the daily time frame, and ask yourself, what is price doing currently? So on the 8-hour time frame, you have this area taken out, but price is trying to deliver to the daily time frame. So if this happens on the daily time frame, then we can reanalyze again, come back and look for these buying opportunities to take prices all the way to 30,000. So once you have price action and it's at a point where it's very difficult for you to understand or for you to take positions, it's very okay, because there's certain times when the market just has to like take a break. You need to take breaks as well. So I'm gonna sit on my hands as well on NAS100 unless I see something that's really like lining up correctly before taking any positions. So just looking at this from the daily time frame, and you can do this directional bias on higher time frames, and that's it. So you can stick to the daily time frame. You look at an impulse, you get a correction, you look at an impulse, you're waiting for corrections, so you can take prices again to the upside. So you can do this directional bias on the daily time frame, and that's it. Or you can then step to lower time frames and still put like the information from higher time frames together and see if you can have better entries and stuff like that. So let's clean this. Step again to the 8-hour time frame. So this one I'm looking on the 8-hour time frame, and you can step down to the 4-hour time frame, something like this. So look at this. So I always mention this. This is how I look at price. So there's an impulse and I'm always expecting a pullback, so I can take prices to the upside. So that's how price moves, higher highs and higher lows. Or you get an impulse and I'll wait for a correction like this to take prices again to the upside. So if you look at this on the 4-hour time frame, you have an impulse thing and you have this lining up as a correction. So I'm still expecting prices to move to the upside. That's just how I look at price. No, you can look at this differently, but that's how I look at prices, and it might be different for you. So you might see prices moving again to the downside, but basically this is what I'm looking at. Impulse, correction, impulse. Same thing. Impulse, correction, impulse. So that's the only structure I look at. Just this two. You get an impulse, you get a pullback, you get another impulse, or you get an impulse, you get a correction like this, and I'm waiting for the next pullback. So the reason I'm saying this is because you might get really confused once price starts doing something like this, and you might not even be aware price is consolidating unless you look at it from higher time frames and understand what price is doing or where price is headed to. So that's it for me on the 4-hour time frame on NAS100. So the directional thing again on NAS100, once this consolidation thing is over, impulse, consolidation, and I'm expecting prices to move to the upside. Now if I'm wrong with this analysis, you should see prices moving again to the downside. So the question is, if I'm right, where is price going to? If I'm correct with my analysis, price is headed to 25,000. So price is going to give you impulse, correction, impulse, correction, impulse, correction, all the way to 25,000. If I'm wrong, price is going to take out this area, giving you, let's say, an impulse, correction, impulse, correction, impulse, correction, all the way to 20,000. So you can trade on either directions. If price starts moving to the upside, you're looking at these massive moves, so you can hold these positions longer. If price starts trading to the downside, you're looking at very minute moves or very small moves, like smaller moves. So once you get in, you're not holding this for too long, because we're very close to the psychological level and buyers might step in again. So that's basically what I'm looking at. But if you had to ask me what's my preferred direction on NAS100, it has to be this move to the upside. So impulse, correction, and I'm expecting a move to the upside. So that's it for me on NAS100, and I'm not going to look at the hourly time frame because I use the hourly time frame for my entries. So I'm going to look at the next pair, and that's the S&P500. So looking at the S&P500, same question. Where is price at? Where is price most likely going to go to? Is there a psychological level you can look at? Is there a trend line you can look at? Just two basic principles. So looking at this, you have, hold on. So let's look at a bigger structure thing on the daily time frame. So something like this. So here's a structure thing I'm looking on the daily time frame. You have an impulse as a pullback correction thing, and price takes off, giving you the next impulsive move. So looking at this on the daily time frame, you can tell already at some point you should get the S&P crashing to an area like this, so you can take moves again to the upside. That's simple, that's basic. Now if you clean this, and the question is where is price currently at, so I can zoom into an area like this. We're still on the daily time frame. So price is currently sat at 6,000. So an inability for prices to go through 6,000, you should expect prices to drop all the way to 5,500. And an inability again for prices to go through 5,500, you should expect prices to come back to 6,000. An inability to go through 6,000, another drop, and price is going to keep doing something like this and even giving you a consolidation, and that's how these consolidations form. But we're looking at this, and there's this inability for prices to go through 6,000. So where is the next level price can gravitate to? It has to be 5,500. So once you look at this, the next question is there a trend line you can play with from lower time frames? So you can step down to, let's say, the 8-hour time frame and see if there's a trend line we can play with. So on the 8-hour time frame, what's the structure you're looking at? Same thing, impulse, correction, and price starts moving, correcting back to this area and stuff like this. So looking at this on the 8-hour time frame, there's a breach already, or there's a violation of this trend line on the 8-hour time frame. So once you step back to the higher time frame, which is a daily, you start asking yourself questions like, if we have this violation here and this violation stays, where is price most likely going to go to? first you have the psychological level 5500. Next you have your trend line, so you might be sat through a consolidation thing like this, and that's very easy sometimes for you to anticipate this, or that's very important for you to anticipate this, because once you see the sales coming in while you're sat in an uptrend thing like this, you know already there's a possibility for these pullbacks to come in, and if the pullbacks are coming, then you're looking for sales, and once the sales come to an end, you're looking for buys again to the upside. So that's something you can pay attention to, that's something you can look at, and that's something you can already prepare, you can anticipate and keep your focusing and just watch how price is playing or how price is pulling back. So that's what I'm looking at on the daily time frame on the S&P 500. So if you step down to lower time frames, so on most of these pairs like the indices and stuff like that, I think I'll be sat on my hands just to see what price is doing. So here's the 8-hour time frame thing I've been talking about. So you look at this move, there's a pullback, move, pullback, there's a move, there's a pullback, inability for prices to go through this area, and we have price again trading below this psychological level of 6,000. So where is price most likely going to go to? It has to be 5,500. So this depends also on what's happening on, let's say, the DXY, because if the DXY starts moving to the upside, so let's say the DXY pulls back to an area like this and starts moving again to the upside, then you can step back to pairs like the S&P and NAS100 and US30, and you should expect prices to move to the downside like this. So it makes it very easy sometimes if you just understand the bigger moves, and once you understand the bigger moves, then you can scale down to lower time frames and start playing with minor structures within the bigger move. So that's what I'm looking at on the S&P. So let's see, you can look at this on the 4-hour time frame. All right, cool. So this is looking really good on the 4-hour time frame. So look at the move thing like this. So you get the impulse thing, price moving to the upside, you get a breach of that trend line, there's an inability for prices to go through, the psychological level of 6,000. Where is price most likely gonna head to? It has to be 5,500. So while you're looking at this, while you're looking at prices moving all the way to 5,500, you need to pay attention as well, because there's an impulse thing, you might get a correction and price moving again to the upside. So sometimes you need to look at this from both sides of the coin, and you might be sat here thinking we're having a clear drop all the way to 5,500, but once you look at it, price might be giving you this and for a move again to the upside. So I'm always very cautious when looking at these prices. So look at this on the 8-hour time frame again. So if we get prices, so let's say price starts moving to the upside and you see prices trading above 6,000, this is a no-brainer, because we headed all the way to 6,500. That's going to be very easy. But if we stay below 6,000 and you see prices coming to the upside, there's this inability, you should expect prices to then drop to the next level, and that has to be 5,500. So that's what I'm looking at. And on the S&P 500 as well, I'm not taking any positions right now. I'm just going to sit on my hands and see what's happening, and hopefully the price action becomes really clearer, and then I can go in, let's say, for the buys or the sells. So currently on the S&P 500, I'm just going to be sat on my hands waiting for price to present itself again properly. I'm going to pay attention to what's happening on the DXY, because if this guy keeps moving to the upside, then there's no need for me looking for buys on the S&P. I would just rather wait and see if there's a possibility to get this sells to the downside. So that's it for me on the S&P 500, and let's look at the last one, and that's gold. So I'm really quick on this because the price action hasn't really changed, and every week once we do like the market focus thing, you might look at price giving you just minor movement within the overall move. So here's gold on the daily time frame, same principle. If you zoom out on this, same principle, make it look very easy. Same principle, you get an impulse, you get a correction, price starts moving, and now there's this impulsive move. So we're waiting for the correction so we can take prices again to the upside. On the daily time frame, this is going to take time. So where is price currently at? And I've modified my levels on gold as well. So I'm looking at 2,000, 2,500 and 3,000. So looking at this, where is price at currently? Price is trading above 2,500. Where is price most likely going to gravitate to? 3,000. So what is price currently doing? Is there a trend line thing you can work with? If you put something like this, there's an impulse correction, impulse correction, impulse correction. So you're expecting prices again to move to the upside, and this is just from the daily time frame. So you can clean this and head over, let's say, to the 8-hour time frame, because you understand already what's happening on the 8-hour time frame. So now you're looking at this on the 8-hour time frame, same piece of price action. So I'm going to show you. Hold on, let's see, right here. So on the 8-hour time frame, you get an impulse, massive correction, you get an impulse, you're expecting the same thing, massive correction. So you can take prices again to the upside, and that's why I still have my buy positions on gold, because of the structure thing and because of where price is most likely going to gravitate to. So let me zoom in on an area like this and I'll show you what I'm looking at. So you get an impulsive move, you get a consolidation, and I'm expecting prices to move all the way to 3,800. So while looking at this, or why paying attention to this price action, I'm a little bit more confident holding these positions because of what price is doing. Impulse, correction, impulse, and that's what we're seeing right now. You have your impulsive move, you have your correction, you're expecting prices to move again to the upside. So personally, with the positions I have, with the position I have on gold, I'm looking at this area to cap my buys and just sit. So if I can hold my positions up to this area, or if price can move to this area, I'm gonna cap my buys at an area like this, because every time you take out these highs, you should expect some kind of deeper pullbacks to come in before price moves again to the upside thing. So that's something I'm paying attention to on gold, and you can look at this on lower time frames. Again, this is on the 8-hour time frame. This is on the 8-hour time frame. So I'm paying attention to this trend line thing on the 8-hour time frame. Impulse correction, impulse correction, impulse correction, and we're expecting another impulsive move to the upside. So you can look at this on the 4-hour time frame. So there's it on the 4-hour time frame. So we had this trend line thing on the 4-hour time frame, impulse correction, impulse correction, impulse, fade at this point. So right now you're looking at this consolidation thing on the 4-hour time frame, but if you look at it on the 8-hour time frame, what you see as a fair trend on the 4-hour time frame, so you're looking at this trend on the 4-hour time frame, a fair trend on the 4-hour time frame is simply a delivery on the 8-hour time frame, and you're still expecting prices to move again to the upside. Now, is there a possibility for sellers to come in on gold? And I'm going to tell you yes, because if you look at the DXY thing, if this guy starts moving again to the upside, impulsively to the upside, then you can come back to this pair. You're looking at gold, and you should expect prices to drop again to the downside. But I'm still holding these positions, and the reason I'm holding these positions is because I'm expecting the DXY to drop or to sell just a little bit. And if we can get these sells on the DXY, then I'll look at this on gold, and I'm still going to hold these positions and see if we can take out this and just see how far we can go. So you need deeper pullbacks on the DXY for us to actually take prices from here all the way to 3,000. So we need deeper pullbacks on the DXY. But going off of this minor structure thing, I'm still holding my buys on gold, and let's see how far this can play. And yeah, let's see that on the 8-hour time frame. I might show you guys a 4-hour time frame, but it's not a lot you can do on this other time frames. Worst case scenario, let's say you step down to the hourly time frame, and if you're looking at this, and let's say you're swing trading, and this is something I like to do. So I'll look at my structure thing on the daily time frame. So I'm gonna step, let's say, to the daily time frame. I look at my structure thing on the daily time frame, and I ask myself, where is price most likely gonna go to? I see this coming in, impulse correction, you get an impulse correction, impulse correction, impulse correction. Where is price most likely gonna go to? It has to be the 3000 level. So once I step down to, let's say, the 8-hour time frame, and I start looking for my entries, or I start looking for the setups, I have already at the back of my mind where price is most likely gonna go to. So I'm a little bit more confident holding these positions. So if you look at this, I'm a little bit more confident holding these positions. So stepping down again to the 4-hour time frame, you get this impulsive move, you get this violation thing, you get a break, price presenting itself as a consolidation thing. So you're expecting prices to move again to the upside. So I'm gonna show you guys something right here. So let's look at this. So if you say this is a consolidation right here on gold, so I'm going to pay attention to these highs right here, because we had sellers stepping in once prices got to an area like this, and it wasn't just like minor step in, like it wasn't a minor step in. So you had sellers coming in, you had sells, sellers, sells. So if we see prices testing an area like this, you could expect sellers to come in again to take prices to the downside. And once this happens and the DXY keeps moving to the upside, this piece of price action, this consolidation thing right here, could help you, or can help tell you why those sales can still move again to the downside. So this is all just technicals, and it has nothing to do with fundamentals. And you're looking at this and just understanding where price might find it difficult to go through or to move past. So this area right here might be a difficult area for us to clear, but if we take out this area, then I'm expecting prices to take out this, and again the movement thing all the way to 3000. So that's it for me, guys. That's it for me with the market focus thing. So I'm just looking at bigger levels. So if I can zoom out on this, I'm looking at bigger levels. I'm going to take less trades this time, and I'll hold my positions a little bit longer. So we're moving to the upside, consolidating, and I'm expecting prices to move again to 3000. So let's see how this plays out, and I'll keep you guys updated. And I hope you found this interesting. Make sure you watch the previous week's market focus, just so you can tag along as we keep moving and keep looking at these levels. And stay patient and be consistent as well, guys. See you during the next one. Bye for now.